Hello everyone and welcome back to School of Stock Markets YouTube channel, and we are back with another stock research for all of you. And today the company under consideration is Cosmofilms Limited. So let's find out about this company. So Cosmofilms Limited, incorporated in 1981, manufacturers biaxially oriented polypropylene films (BOPP) films and engaged in the production of flexible packaging films. Company's products majorly comprises of BOPP films, thermal films and coated films. It is the largest BOPP film exporter in India. So what are BOPP films? BOPP films are a product which is used for the packaging of other goods. Like there are thousand different type of BOPP films available in the market, and they are famous for their durability. So what does they do? Cosmofilms produces BOPP films, thermal films and coated films. Then they sell them to other manufacturers, which then package their goods in these films. So they claim that they are the largest exporter of BOPP films in India, right? Now let's move to the company's website to find out more about the company. So with manufacturing units in India and Korea, Cosmo has a BOPP manufacturing capacity of 200,000 tons per annum and a CPP coated films manufacturing capacity of 9,000 ton per annum with a sales of around USD 311 million, and in INR it is at 21.63 billion. In fiscal year 18-19, Cosmo is the largest BOPP film exporter from India and the world's largest manufacturer of thermal lamination films. So largest exporter of BOPP from India and the largest manufacturer around the world for the thermal lamination films, right? So you can imagine that this company in their field is a huge company, right? You might not have heard about this company, but the specific industry or specific product that they are producing, they are huge in that. And apart from that, it is not like that they are just producing one product, right? They have huge variety of products to offer their customers, right? It is like they are into the business of producing different films which is used in the packaging, but it is not that they are just producing one sort of film. You can see this in their product list also. So for the global range, they are offering flexible packaging films, lamination films, label films and industrial films. So different 4 categories for the global range, and especially for the US range, they are offering thermal films, digital film, prime label films and packaging films. So this is for the US range. Then Korea, Japan range, you can see OPP films, PET based films and nylon based film, right? So yeah, definitely these 3 countries, US, Korea and Japan, are their major market, but it is not that they are not exporting to the other countries, right? These 3 countries are the biggest importer of their goods, and they also have a manufacturing units in Korea, right? So here you can understand by this, they are offering one specific sort of product, right? But the category in that product is huge. They have different kind of categories in one type of product, right? You can understand by this that this company is huge in their field, correct? So now let's move to the company's financial to find out whether these big numbers or these big range of product is supported by the financials also or not. So here you can see we have balance sheet right in front of us for the year ending 2022 latest balance sheet that is available. So property, plant, equipment is a really major component for a manufacturing company, and you can see slight decrease in the PP. So is it a bad sign? No, we can't decide it yet. Might be they have decreased their PP but have increased the PP which are more efficient, right? We will find out it later in the financial statements itself. You can see capital work in progress. Here you can see capital work in progress has increased tremendously. And again, here in the current assets, you can see that inventory is also increased almost by 100 CR, and there is a huge increase in the capital work in progress. There are 2 cases. One case, inventory is increasing, right? And capital WIP is decreasing. What is the reason for that? The reason for that is that the company has produced the goods. Now goods are not selling. That's why they have huge levels of inventory, and their capital work in progress is decreasing because now they are not projecting any good sales. Then there are these type of companies, right? Those who have high level of inventories, increasing level of inventories, still their capital WIP is increasing. The reason for that is that they are projecting high level of sales in the future also. That's why they are preparing themselves to match the demand in the market. Now let's move to the statement of profit and loss. And if you see in the revenue from operation, you can see increase of 800 crore rupees Now you can understand why their inventory and their capital work in progress is increasing, because their revenue has increased by 800 crore rupees. So when a company see increase in the revenue by 800 crore rupees, you can imagine that they are forecasting more growth in the future. That's why they're increasing their inventory and capital work in progress. So this is a great sign this company has shown, right? And if you move to the profit for the year, you can see almost 97 crore rupees increase in the net profit for the year. So this company is doing great. They are not just claiming things, they are also proving them by the numbers, right? And if you see at the total comprehensive income, you can see again almost 98 crore rupees increase in the total comprehensive income. So these two things specifically shows me that how this company is projecting, how confident they are, and they are in the, onto the path of growth, right? You can see this. They have higher level of inventories, they have higher level of capital work in progress, their revenue is increasing, profit is increasing, total comprehensive income is increasing. So they are following the a proper trajectory of the growth, right? It is not like that they are just increasing inventory and capital work in progress, don't know what to do with that. They are actually making the sales with them. So this is a great sign that we can notice here, right? So now let's move to the cash flow from the operations, because I believe cash flow from the operations and investing cash flow, these are the two really major components which tells you about a company, right? So net cash flow from the operating activities, you can see an increase of almost 250 crore rupees. So now let's continue with our trajectory. Their capital work in progress is increasing, their inventory is increasing, which means they are projecting more sales. Then their sales are increasing, which means they are meeting with their projections. Then their cash flow from the operations is increasing, which means they are not just making credit sales, but they are also collecting cash from their sales. So this means they are on a very solid trajectory of growth. Great thing to see in a company, right? Then cash flow used in the investing activities, you can see an increase of 400 crore rupees in the investing activities, right? They have invested almost 400 crore rupees more in the PPE or investing activities compared to the previous year. And if you move specifically to the PPE, you can see 271.53 crore rupees invested in the PPE that I was talking about, right? So might be the total accumulated number of the PPE has decreased, but they have invested more in the PPE. A reason why this is happening, because they are purchasing more efficient manufacturing units, right? This is what companies are doing nowadays to make their operation more efficient, and for reducing the expenses, they are buying more PPE which are efficient and reducing the old PPE. Because of that, the value of the total PPE in the balance sheet is going down, but their actual production capacity and the efficiency of the production is increased, right? So here we can notice this also in this company. And again, in the financing activities, you can see a less outflow in the financing activities, which means they are trying to capitalize borrowing for their business, which is a good thing, right? Many a times what a company do is they take more and more finance, right? But they do not have business. This company have a business and increasing a profit we have witnessed. Then they are using the finance, so which means that they are going to use this financial to increase their profits by threefold, fourfold, right? So it is a good thing to do. So with all the product range we have talked about, with everything about the company that we have seen, after seeing the financial, let's move to a short analysis on the company to find out actually what is this where this company stands in the market, right? So here is the short analysis on the company. Plastic products is the industry of this company. Market capitalization at 3299.07 crore rupees. So this is a small cap stock. 4443.55 crore rupees of enterprise value, which is more than the market cap. Again, a great sign. Promoter holding at 44.09%. Now, why promoter holding is a really major component while we investigate a company? The reason is that promoters are most of the time directors, chairman, or CEO in the company, right? So they exactly know what is going inside the company. So if promoter sees that something bad is happening in their company, why would they stay invested, right? They are staying invested after knowing what is happening in that company, which means they are seeing something good. So it is a good factor to consider while investing, right? That's why we always mention promoter holding. Earning per share, great, 218.24 EPS. It's a great EPS. Promoters holding pledge 0.00%, again good thing. Industry PE is at 20.72 and PE of the company is at 8.3. So lower P compared to industry. And if we consider this as a valuation parameter, this company is a undervalued company. So foreign institutional investor are also vested in this company at 6.18%. Return on equity, tremendous. Great return on equity, 39.00%. ROC again great, 30.79%. Debt to equity is 0.68%, which means less risk for the investors. So now let's see what are the opportunities in this company. Companies with 10% increase in the share price over 3 months with rising net profit growth. Net profit is increasing and their share price is increasing. It is not like that there is a hype about this company in the market that just share price is going up. Their profit is also going up and simultaneously their share price is also going up. Profit making company with high ROC and low PE. Remember, many a times what happens that a company with a good profit has higher PE, which makes it less desirable. People think that this company already has this much of high PE, doesn't matter how good profit they are having, but this company is having good profit and growing profit, and then too they are having a low PE, so makes it more desirable, right? So this is definitely undervalued growth stock according to us. You can do your own analysis. Highest recovery from 52-week low and a stock with P less than 10 and P less than the industry standards, right? So this is it about this company from our side, guys. Thank you so much for watching this video. Please do like this video, share this video, subscribe to our channel, and we'll be back with another analysis soon. Thank you so much for watching.